Are you prepared with your tax audit reports? The due date of submitting tax audit reports and filing return is fast approaching. If you're still confused about the applicability of the tax audit, then we are here to clear all your doubts in this video. Hello and welcome. I'm Jyoti Arora, tax expert at Clear. We are India's largest tax and financial services platform for individuals. To support us, subscribe to our channel to see all the taxation and finance related videos. Now let's see why and by whom a tax audit is required to be conducted. Now, a tax audit determines whether financial records and transactions recorded by the taxpayer are correct and they are correctly accounted. Now, tax audit ensures that the actual turnover, expense deduction claimed and the income reported by the taxpayer are accurate and according to the Income Tax Act 1961.
Now let's see who are compulsorily required to get their accounts audited. For some people who carry on business, there are certain criteria defined for the applicability of tax audit under the Income Tax Act. Let us divide the criteria into three parts. Where turnover or gross receipts exceed rupees 10 crore, so all categories of persons are liable for tax audit if they fall under this category. The second part is turnover or gross receipts exceeds rupees 2 crore but less than rupees 10 crore. Then you need to further check whether cash transactions are up to 5% or it exceeds 5% of the total receipts and payments. In case the cash transactions of the person is up to 5% of total gross receipts or payments, then no tax audit will be applicable. But if any person's gross receipts exceeds rupees 2 crore but less than 10 crore and further cash transactions exceed 5% of the total receipts and payments, in such cases tax audit will become mandatory. Now the third part is where the turnover or gross receipts are less than 2 crores. Now again the next step is to verify whether cash transactions are up to 5% or if they exceed 5% of total receipts and payments. In case the cash transactions of the person is up to 5% of total gross receipts or payments, then no tax audit will be applicable. And if the taxpayer is the company and the cash transactions of the company exceeds 5% of total gross receipts or payments, then tax audit will be applicable if the turnover of gross receipts exceed rupees 1 crore. However, if the taxpayer is an individual or HUF or a partnership firm and the cash transactions of such person exceed 5% of total gross receipts or payments, then tax audit will be applicable when the person is eligible to opt for presumptive taxation scheme and profit is claimed below the specified limit of the scheme and total income declared is above the basic exemption limit. Now, there are certain other criteria also where tax audit is applicable. If you are running a business which is opted for presumptive taxation under section 44AE, 44BB or 44BBB and you claim that profits or gains are lower than the stipulated limit in the said section, then tax audit again becomes mandatory. Presumptive taxation is an indirect method to calculate taxes. Taxation under this is different from the usual income tax rules based on the taxpayer's turnover or gross receipts. Under this scheme, the taxpayer is required to declare a given percentage of turnover as income and pay tax accordingly. So its main aim is to simplify taxes for small businesses and professions. We have explained this in a very creative and a simple manner, so go check out the link in the description box. It is important to note that after opting for a presumptive taxation scheme, if you decide to show and file profits as per regular business, that is ITR 3, before the end of 5 years, you will lose presumptive benefits and you will be disallowed from presumptive taxation for subsequent 5 years. And in any of these 5 years, if your taxable income exceeds the basic exemption limit, then you are liable to maintain books of accounts and carry out tax audit for that particular financial year. In the case of professionals, if your gross earnings are more than 50 lakh in a financial year, then again tax audit is required. But in case you opt for presumptive taxation under section 44 ADA and satisfy two other conditions, that is, the profits from profession are lower than 50% of gross receipts in the said section and the income is more than the basic exemption limit, then tax audit becomes mandatory.
This was all about tax audit applicability when there are profits from business and profession. I hope that the confusion about applicability of tax audit is over to a great extent. If yes, then please comment yes or clear in the comment section below. However, some more information about tax audit applicability is left, so stay tuned to get more clarity on this.
So in cases where you are not opting for a presumptive taxation scheme but want to declare an income below prescribed limit as per section 44 AD, that is, it can be a business loss also, and your total income is above the basic exemption limit, then tax audit will be required.
Now, it is a very common misconception that we should show at least a profit of 8% or higher, otherwise tax audit will be mandatorily required. Now, had this been true, then the concept of losses would have not existed in the Income Tax Act under this section, right? So the rate of 8% or 6% is valid only for section 44 AD, that is under presumptive taxation scheme. So if the SSC opts for the presumptive taxation under section 44 AD, then the net profit must be 8% or 6% of the gross turnover. Now, if the SSC follows a regular computation of business income, that is, claims all the expenditures including depreciation, maintains books of account, etc., then even if the net result from the business is loss, there is no tax audit required, provided that its turnover does not exceed rupees 1 crore or 10 crore as the case may be. This was all about section 44 AB of the Income Tax Act. If there is any query related to this or income tax, then please comment in the comment section below. We will reply to it as soon as we can. I hope this video was helpful to you. Thank you for watching it. Stay tuned for more updates. Take care and goodbye.